All right. Welcome back, everybody. So this is our second in a series of Facebook Lives. I don't know if this is actually streaming or not because it says it's preparing, so we'll see. And last week we talked to Megan Freed about what it was like to actually go through the EIDL loan application process. And today we have Sam Brotman from Brotman Law out in San Diego to talk about the tax implications of what is happening with the CARES Act and the coronavirus. Sam, thank you so much for joining us.
Awesome. Thanks for having me, Brooke.
My pleasure. All right. So I would kind of like, if at all possible, to see if we could talk about three things. The first is I want to talk about how the IRS is changing the way it's operating right now. I want to talk about what is available, what kind of tax relief is available to people because of the coronavirus. And then I want to cover a topic that, because you do tax controversy work, is so right up your alley, that people may get in trouble with their taxes over the next 4 to 6 months, right?
Yep.
So, I do want to talk about what it's like and in how they can set themselves up so that when it's over, they can kind of get themselves out of trouble a little faster and easier, maybe? Does that sound like a plan?
Sure. Sounds good.
All right. So let's start with what's the IRS doing differently right now?
Okay. Conceptually, you can think of the IRS as a big, large governmental organization. And if in
Okay, I'm good with you there.
It's good that you're there. But for most people, if you don't interact with big, large government organizations, you might have a little bit of a hard time making an analogy to this. So if you ever go to the post office or the DMV, that's about how efficiently things work from a process standpoint at the IRS sometimes.
So a lot of time spent in line.
A lot of time spent in line, but it's a machine. And if you do something that goes against the grain of the machine, then they don't necessarily know what to do with it. So
Okay.
the issue is you have this big machine that is operating and that collects revenue on behalf of our government and then tries to enforce the collection of that revenue and through either examinations or collections or anything like that. And I'll cut out the other parts of the IRS just for the moment. But
I was going to say, come on, we're all newbies here, so.
what has happened is we've slammed the brakes on the machine. And so
right.
at the federal...
When you say we've slammed the brakes, I know they've done some things like you don't have to file your taxes instead of April 15th, it's now July 15th, right? And first quarterly payments aren't due until July 15th.
Yes.
So that's some of it. But you're talking about more than that, right?
I'm talking about this from a process standpoint, and I'll go into the things that they have done to provide relief for taxpayers. But I just want everybody to get a sense of this real quick.
Okay.
The problem is when you slam the brakes on the machine. So let's take 2018 when the government was furloughed for a month because we couldn't pass budget. The process of furloughing the IRS for 1 month put them 18 months behind. So.
Whoa. Really?
Yeah. Because
they did 1 month behind?
They're not just 1 month behind, 18 months. Because
craziness.
The effect of a stoppage is cataclysmic for them. So like, for example, they have to hire all these people to man the front lines during tax season to answer all the questions and serve as representatives. The IRS has a huge hiring increase to offset the crush of tax season. They're not hiring right now. So they've moved the filing deadline to July 15th, But unless the lights come back on, all these people show up on June 1st, it's going to be chaos. So some of the government and some of the IRS is set up to work from home. So you've got your base collections officers, your field collection officers, and your field agents who are largely remote anyway. So they're okay. But the processes in the IRS have shut themselves down.
All right, so I hear you say collections are there, but what if someone wanted to file their 2019 taxes and they're due a refund? That doesn't sound like something that a collections person is going to handle.
No,
Are they doing refunds right now?
They are processing refunds, but they don't have the people to manually process the refunds in case something gets kicked out. So if you file an electronic return right now, it goes through the system. As long as it stays electronic, you're fine. But if there's any sort of deviation from standard process and a human needs to get involved, there's no humans there.
That's not happening.
There's no humans processing powers of attorney. There's no humans approving collection resolutions right now. There's not a lot of input. So it's a mess. And because it's a mess, two things have happened from a tax standpoint. Number one, it created a tremendous opportunity for people with current tax problems to get things through the system, because they have such a backlog of cases that really, if you have tax problems, do it now. If you don't have a tax problem and you need to rely on the government for something, just know that when they turn the lights back on, they're going to be overwhelmed with work and with the crush. So
is that good or bad for people with tax problems?
It's bad from a lot of standpoints. It's good from some standpoints and it's bad for others. And here's why. When they get busy, there's less thought and care that goes through the process. Much like a CPA in tax season, if I put a big, or anybody, if I put a big pile of work in front of you, you're just going to be focused on getting through the work. There's not going to be any feeling that goes in the work. There's not going to be any creativity that goes in the work. You're just going to get through the work. And so the reality of the situation is they're going to clear this massive backlog that they have been dealing with. And they're already trying to make life easier on themselves. But by the fact that they can't rely on their normal processes and they can't really interact with one another as familiar as they can, if they need something from their manager, for example, they can't just go down the hall and ask that person. So the process has gotten a lot more distorted.
So what you're saying is there are a lot of people who aren't working. They are going to come back to work. If you've got a problem now, it's going to take a long time to get it resolved.
It's going to take a lot of time to get it resolved, and there's going to be a lot of pain associated in getting it resolved. Because if you don't fall within the government works, it's like when you mail a letter. If you mail the letter correctly, you don't have any problem getting the letter to the end destination. If the stamps don't align exactly and they don't go through the machine, if the address is legible, something happens and it gets kicked out, that's where your problem is. Most people don't fall within the cookie cutter that the IRS has in place for them. That happens from a collection standpoint and from an examination standpoint.
All right. So one of the things you said is the collections people are still working. And I know when we were chatting earlier, you said that you know where they are because they're not out in the field anymore.
That's correct.
So you can get answers on stuff. So that sounds pretty good. I know that one of the things that collections people do is put liens on property, and that's a big problem right now, right?
It's a huge problem for people in coronavirus land, because a lot of the funding that businesses rely on through the SBA, so the PPP is exempt from this. So if you're applying for a PPP loan, your tax problems or any liens that will be filed won't impact you. But if you're applying for an EDIL, if you're applying for a standard 7A loan, to the extent you have a tax lien, they're not going to deal with you. And so the issue with that is, it's not just people who have current tax problems, it's all the people right now who are exhausting their savings, trying to keep their businesses afloat, trying to keep their families in good order, who are draining down on the monies that they would use to pay taxes because they didn't forgive taxes. The practical effect of what's happened is they pushed everything until July 15th. The filing deadline's extended, 1031 deadlines are extended, deadlines for making retirement contributions are extended. Everything is just pushed. But no, coronavirus didn't magically forgive anybody's tax liability. Even with payroll taxes, they're deferring payroll taxes, and they've actually been very generous with the deferments, but they're not forgiving. Yeah.
Okay. So if you have a lien, we know where to find those people to get the lien cleared up, right? Like the collections people we can talk to. If we can get whatever it is paid off, we talk to the bank, we get the lien removed.
You can only talk to the collections people if you have a really serious problem and you've been assigned to them. If you haven't been assigned to them, meaning you weren't dealing with somebody previously, you're out of luck.
Yeah.
I can't call Rudy and say, hey, Rudy, I'd like to talk to Rudy about my friend Brooke because Brooke has a tax lien. Rudy's going to say, number one, Brooke's not a member. Brooke's not one of my cases. Number two, even if you submit a POA to me, even if I were to say I have power of attorney over Brooke, no one's there to process it.
Okay. All right. So the other thing that I know has been an issue recently, if you have a payment plan for your taxes.
Yes.
So let me kind of walk this through because this is what I understand. You can tell me if I'm right or wrong. If you stop paying, they're not coming after you right now because they don't really have the manpower. However, if you stop paying, then it makes you ineligible for an EIDL because you've now defaulted on a loan to the government.
Most payment plans are correct. Most payment plans are automatic. So you can stop paying if you can call them and tell them I want to stop paying. So the reality is you call and tell them they want to stop paying, there's nobody there. So anybody who's on a current,
it's not like you're sending a check in every month.
No, it's not like you're sending a check-in because most of what they've set up is direct deposit. So if you're supposed to send a check-in, just don't send your check-in. If you're operating on direct deposit, there's no one to push the button to stop the automatic withdrawal. So you're going to need to cancel it at the bank level. If you do that, though, then you're deemed out of compliance technically. And if you're out of compliance with them, then you're going to have problems when you go to apply for SBA funding because one of the things they ask you is, are you current on your taxes? And the answer to that is no.
All right. So if we have a payment plan, keep paying and avoid liens. All right. So that's what we're doing currently. So something you said a minute ago was people are draining their savings right now. There is a deferral on payroll taxes, but the taxes are deferred. They're not magically forgiven. So people in the next 4 to 6 months are going to have a hard time paying taxes. How can people set themselves up? I don't know how else to say this.
How do you set yourself up for success?
Yeah. What do you pay? What do you not pay? What do you do so that when this is over, you can deal with it faster and easier?
So you deal with this, Brooke. When somebody comes to you that is having financial issues, good or bad, you would have a forward-looking budget. And
we call it a profit plan.
Forward-looking profit plan, that's right. If you have a forward-looking profit plan, then that's essentially what you need to do. So everybody right now can probably self-identify, am I going to be able to pay my taxes? Am I going to have a problem or am I not? And the best thing that you can do right now is get out in front of this as quickly as possible. If you know you're going to owe taxes on July 15th, start working on a payment plan right now. Start looking at your financial situation, start trying to project out to the end of the year. And look, I realize this is difficult because no one knows exactly when this is going to go away. But to the extent you can get out in front of this now, to the extent that you can pre-negotiate with them, to the extent that you can work on your financials now to tell the story that you're going to need to tell to get the payment plan that you want to get, do that. Because the practical effect of this is, where I was going with all this is this. There's going to be a lot of people that are going to owe taxes on July 15th. But the worst part about this is not going to come in July, or even when the filing deadline extends itself and people can't pay that. It's really next year, because the snowball is just going to continue and keep getting bigger. And although they've suspended interest and penalties until July 15th, they've given no indication that they're going to be able to do that in the future. And so the practical effect is you're going to have, particularly for business owners, for W-2s, you're getting your taxes taken out. And as long as you keep getting your taxes taken out, you probably are reasonably okay. But for business owners who rely on profit to make estimated tax payments, this is where the problem is, because you're going to get behind for 2019. You're going to be behind for 2020 because you can't pay 19, you can't pay 20. And then when we get into 2021, a quarter or two is going to pass, and you're not going to be current then. So by April of 2021, you're now owing 3 years of taxes, or 2 1/4. And the problem is just going to get worse. And so the other thing that's brewing in this is you're going to have people who are going to owe a bunch of money because they're falling behind on their taxes and they're not building a plan for it. They're weakening their cash reserves now so that they're not prepared to deal with this later. And on top of all this, they just gave away $2 trillion at the federal level. Where do you think they're going to get the money for this? It's not popular to raise taxes, and no one is going to dare raise taxes after coronavirus. So they're going to sneakily raise enforcement. They're going to increase collection activity. They're going to increase examination activity. And they're going to start hammering people on the back end. So if you owe, there's going to be a lot more serious measures that are going to be put into place to deal with this later down the road.
All right, hold on. Let me make sure I understand this in like normal words. Audits are going to go up and they're going to be meaner about them.
Audits are going to go up and they're going to be meaner about them. Collection activity is going to go up and they're going to be less flexible. So, for example, the local living standard for housing and utilities in San Diego for a single person, the IRS has collection standards that they use. They say, this is how we think you should be living. And if you're living above these means, we think you should pay us more on your payment plan. Okay? So the IRS has standards that they try and equate everybody to. For a single person in San Diego, and I realize that a lot of people live all across the country, for a single person in San Diego, your housing and utility standards is $2,300.
Okay.
For your rent and your utilities.
Okay.
I got on Craigslist the other day. If you want to get a $2,300 apartment, including your housing and your utilities in San Diego, you're either going 45 minutes north in Oceanside, or you're going 45 minutes south into Tijuana. So the point is, the collection standards that they put into place initially were already inflexible. And for people who have credit card debt, which they disallow, for people who have other loans, which they disallow, and for people that don't fit into the nice box that the IRS likes to put people into, when you have corners and you're trying to fit into a round hole, those corners get cut off. So that's why it's really important that people get in front of this, because what you think is reasonable, the IRS doesn't consider reasonable. Most people think, well, of course, I'd be able to pay for my educational expenses and for my children to go to college and for X, Y, and Z. And the IRS just doesn't see it that way, because
the IRS wants their pound of flesh first.
Right. The IRS takes the position that they're not a bank. And so the idea that you're borrowing against tax liability that you shouldn't be borrowing against, that's where they have a problem with it. And for most people are making above what the collection agents make, and they're making above what the auditors make. So they don't want to hear your whining when you say you can't pay your taxes. Because the reality is you're dealing with somebody who's in Kansas City, Missouri, or in other places where the cost of living is a lot less. And they're not overly sympathetic towards you or your situation. The other thing that I want people to consider is the states are even in an even worse position. The states are not getting their hotel taxes. The states are not getting their sales taxes because people are buying less. And so there is a contraction of state income. Even if you're in a state with zero taxes, like Texas, the reality of the situation is the other sides of the state enforcement for taxes, like business taxes and sales taxes, they're going to get much more aggressive. So particularly for people who are in larger states, Texas, Florida, New York, I throw Washington State in there, and California, the larger states that have more robust state revenue departments are going to get really, really aggressive. And for most people,
so I know that we have had clients that have come to us in the past, and we've discovered that they had sales tax problems. And Sam, I think we've had some clients in common that have had sales tax problems. And I know that for one client, she owed sales tax in a whole bunch of states, and we were kind of going through and negotiating with those states, and they'd have amnesty periods, and we'd be like, oh, amnesty, we're going to go with that state. I'm guessing no amnesty periods after this.
Yeah, there's amnesty is 2017. There's no amnesty anymore. I mean, we could talk about sales taxes all day, but the reality of the situation is the states have realized that collecting sales taxes from people both in state and out of state is very lucrative. And so they're very, very aggressive towards businesses that have sales tax liability. You can owe $500,000 to the IRS. They may not send an agent after you. You miss a quarter or two of sales tax or payroll taxes, you're going to have somebody at your door. And that's coming from the state. And so the states are much more cash strapped than the federal government because they don't have the resources that the federal government is. So on the state side of things, the states are even more aggressive in this arena. And so businesses, number one, if you have a tax problem, get out in front of it. Number two, if you haven't had somebody look at your taxes recently, like from a business standpoint, and make sure you're in compliance, get in compliance. Because the penalty structures with a lot of the state taxes is very severe. The penalties can often be sometimes 4 or 5 times more than the amount of the tax. I mean, the penalty structures are draconian. And so it's really important that businesses try and protect themselves.
I've talked to clients that you've had that have been like, Sam's a miracle worker. And we were talking to a client who ended a potential client for us, it was a client of yours. And my team kept going, wait a minute, like, we think they're going to get shut down. Why are there not agents at their door repossessing everything they own? Like, we can't. And the woman kept saying, it's going to be fine. Sam's got it. And I called you, and you probably remember this. I'm like, Sam, This does sound like it's going to be fine. You're like, fine. I got it.
Well, so here's the reality. The reality is that most people try and interact with the governments by themselves, or they go through their CPA. CPAs are compliance-based. CPAs fill out financial forms and they turn them into the government. That's what a CPA does. Having a CPA,
and they like rules.
And they like rules. And I don't know about your CPA, but my CPA is not very confrontational. Not really a quality that you look for in a CPA. The reason why my clients don't sweat is because it's less about the tax law and more about an understanding of the processes in the government and how these people operate and what their playbook is. And that's the difference between what I do and what a CPA does. We both share a common knowledge of tax law. I can talk to you about ordinary and necessary business deductions, just like your CPA can, but I know how the machine works and I know how to get people through the machine. And that's the hardest part for a lot of people because, like dealing with the DMV, like dealing with the post office, it's difficult when you're running up against that machine because what you think would be ordinary and reasonable isn't the way they work. And so there's a challenge, and a lot of the art of what we do is translating in our clients' circumstances into terms that the government will accept, or if they won't accept, then we tell them to go fly a kite, and I build their own system around our clients to protect them. And so that's really where I come in, is to help shield our clients, shield their businesses, shield their families, against this machine that's not that there's no illusions, particularly in California, that our state government is fair, because it's not. And
Okay.
most people do the same thing. And the IRS often isn't fair either, because most people don't fit into a square box. You know, everybody is different. Everybody has different family situations. Everybody has different business challenges. And try explaining that to people who've never run a business or have dealt with the pressures and the challenges that you deal with in your daily life. Because government employees just they don't have the mindset for that. And that's a lot of what I do, is help people achieve their peace of mind, help people maintain their profitability, grow their businesses, and manage their tax problems. And no matter whether it's you owe a couple of $1,000s to the IRS or they're sending the criminal division after you, those problems are manageable in different contexts.
Okay. All right. That is awesome. So get in front of it and hire someone who knows how to work the system to your advantage. Let's talk about what's happening right now with coronavirus. So we've talked about people that might get behind, but there are some options for people right now, some things that they can take advantage of, the FFCRA, and then there's some other stuff. Can you talk about those a
So
little bit?
So a lot of the programs that they've put in place are a little bit blocked by the PPP. So if you're going for the PPP, you're not going to be able to take advantage of some of the payroll tax credits that are available. But if you're not eligible for PPP for whatever reason, you can defer payroll taxes and or take a credit if you have employees that have to take extended leave under the FMLA, or you have somebody who gets sick. If they get sick and they're taking leave, or if they have a family or a child obligation, they can take a credit for the amount of the wages that you're paying out. So there are some credits that are involved that are a good thing. Frankly, for most businesses, the PPP and the EDIL lending um, are better than the tax credits that we've seen right now. A lot of the measures that the government has put in place is mostly deferral mechanisms, and the deferral mechanisms are great, and I would encourage people to take advantage of it.
Wait, can you explain that a little bit more? Because we haven't really heard a lot about the deferral options.
So number one, all tax payments are basically suspended until July 15th. So you're not required to make estimated payments. You're not required to pay for your 2019 taxes, and they're basically forgiving penalties and interest during this time. So you basically get
What
90
about
days
payroll?
free money. Payroll taxes, you can defer your payroll taxes, um, and you can hang on to them, but they're also due July 15th as well. So you can do.
So really, if you have the cash, go ahead and pay the taxes.
Maybe. I mean, if you have the cash, if you
Wait,
have the
wait,
cash.
wait. Hold on, back up. You did not give the attorney answer.
If you have the cash and can afford to pay the taxes, it's generally a good idea. If there
Okay.
is better use in your business and you have, if you're sustainable enough and you're healthy enough to defer your tax obligations and make your payments by July 15th, then do it. But healthy and sustainable enough is a very tricky word. And the problem is with most businesses and business owners, they tend to be glass half full kind of people. So you want to be cautious with respect to this. If you have the money, pay it. I mean, when you get a PPP, it's meant for payroll. Pay your payroll. But there are particularly the big advantage here that I think a lot of people are missing is the government's giving away free money for PPP. They're giving away a forgivable loan, which is essentially a grant. They're mandating that you use it for payroll. But if you design your profitability, like if you had a fractional CFO to help you build a profit plan, then all the profit that you get to keep off that is yours. If you have enough to cover your payroll right now and you use a PPP, then the money that you would normally allocate to payroll can go into your own pocket. You could put it in your own pocket, or there's a number of tax beneficial ways that you could take your profit, reinvest it back into your business, or utilize some other tax strategy and really drive your taxes down this year. So this is a tremendous wealth building opportunity for a lot of businesses, particularly those that are able to weather the storm. And I encourage people, talk to your CPAs. You can get an attorney like me involved if you want to. There's a number of planning opportunities and some great opportunities to really drive down your 2020 taxes. And that will increase your net wealth, or it'll give your business more resources, or it'll just massively benefit you. So there needs to be some planning in how the money for the PPP is spent, both so you can maximize your forgiveness and also so that you can take advantage of the taxes, the tax incentives that are out there. I mean, it's just phenomenal right now. In every crisis, there's an opportunity. There is a tremendous opportunity when it comes to taxes right now.
I do want to bring one thing up about the PPP that's very different. Usually, when you have something like this, when you have a loan that gets forgiven, you get hit on the back end, and you've got to show the amount of that forgiveness on your taxes as income.
Correct.
They are not doing that with the PPP.
Correct. There's no cancellation of debt income for PPP. That's what's really important. Is this is free money, and when you have free money, the best thing to do with when you have a nest egg, the best thing you can do with that is leverage it. And depending on the size of your business, the size of your payroll, and your circumstances, there are a lot of ways for businesses to leverage this. You know, for example, if you go out and buy a piece of equipment and depreciate that equipment, you can generate a massive tax opportunity there. I mean, just the possibilities are endless. And obviously, this is a super fact-specific situation for people. But I mean, you know, in our business this year, PPP will probably net us at least $40,000 or $50,000 in tax savings.
Wow.
Yeah.
That's nice.
It's really nice. So, I mean, it's a benefit. But the more important thing about the PPP is it's going to keep my staff employed. It's going to keep their families stable. You know, while the government is shut down, you know, our business is fine, but it really, it's doing what it's designed to do. And that is keep people in place while this is going on. And so, you know, not to just say this is a giant opportunity, although it is, but it's doing good, and business owners can further take advantage of this and use this for very positive purposes. And arguably saving taxes is a very positive purpose.
Yes, absolutely. I mean, so one of the things that we have been talking about, you know, all of the coronavirus stuff, you know, first it was, are they going to pass the CARES Act? The Senate passed it. We're reading the 900-page bill. The House passed a different bill. So then we have to go through and redo everything. And we kind of, there have been hurdles. So the last hurdle that as a team we've been helping our clients clear is the applying for the PPP.
Yes.
And now that we've done that, now that our clients are starting to get funded, we're talking about how to spend, what is the spending plan? How are we going to use this money to make sure that we get, you know, maximum forgiveness? How are we documenting the spending of the money to get maximum forgiveness? Because I keep hearing rumors that government's really going to want to audit that. You don't think that they're quite as likely as I think.
I don't think the IRS is going to audit it, but I do think that there's going to be a really high level of scrutiny on the back end for how these loans are forgiven. The problem with this whole PPP system, number one, they didn't really well define it. So they passed the law, and then they're in the process of issuing draft regulations, which they've changed probably at least 10 times.
I don't think they've changed since Monday night.
Well, I kind of lost count. I stopped following, so I got more important things to deal with. But the other thing is they haven't really defined what the forgiveness provisions are, or the level of substantiation you're going to need, or how to define this. So I think there's going to be a massive problem from the SBA side. So I really would encourage people from a business standpoint. Number one, if you're not working with a fractional CFO or you don't have somebody watching you, you're kind of crazy. But you need somebody to help who understands this process and who's educated themselves in this process, get you through it. I mean, don't think that if the check engine light comes on in your car, that you're going to be able to fix your own engine. So you really need someone to help you through this, because the other problem is the way SBA loans work, the bank doesn't have any liability in this. The bank gives all these certifications to the borrower. So if there's a problem with the loan, the borrower is ultimately on the hook. And so that's the biggest thing. You need an expert, you need a guide, you need a CFO to really walk you through this stuff and who understands this, because it's incredibly complicated. I can't tell you how many calls I've been on with other professional advisors who aren't financially savvy, or even some that are, and they're still debating about this process. So you need to put your trust in an organization that really knows this stuff, that's educated themselves, that's that really knows how to get through this process, because come late June, this is going to be a mess.
It is, and that's why we're so advocating for people to get ahead of it. Let's start on the front end. Let's make sure that we're prepared for that money. This money's going to come in. We need to prepare for it to come in. We need to prepare for how we're going to spend it. We need to have a plan for the money that we would have spent on rent and payroll. What's the plan for that? What's the documentation? Because we really do want our clients to keep it very separate. Definitely separated out on your P&L. Some of us, not the whole team, but some of us on the team think that you should have the money deposited into a clean, fresh, new bank account, and then pull payroll directly out of there. It's not possible for everybody. There are some problems. But what are you doing? What are the steps you're taking? Because if you don't, it's not going to get forgiven. And payments aren't due for 6 months, that interest accrues. And then at the end of that 6 months, what's not forgiven, you have 18 months to pay back.
Yep.
So it's a low interest rate, but it's a quick payback period.
It is. And, I think what will really help people is, to the extent you can separate the accounting for it, to the extent you can show a dedicated payroll account where the funds are being applied to, you're going to need to clarify substantiation. As somebody who deals with taking people's finances and translating them to others, perhaps those who don't understand your situation or your business, the real thing that helps is clarity in numbers. If you could sit down and explain your financials to a 5-year-old, then you're going to probably be able to explain it to an SBA banker. Without joking aside, you do need to go through, this is going to go through a tremendous level of scrutiny, because the reality of the situation is there's going to be a lot of abuse in the process. They're going to clamp down on it, and it's a lot of money that they're throwing away. So you have to be very, very careful and make sure to protect yourself from this. You don't get something for nothing. So number one, protect yourself from this on the back end. And number two, understand what's coming in the future and how they're going to get this money back. Because it's not like they just give this away and they have this unlimited source of funds. No, they need to make this back. The federal government is leveraging the resources that it has, but eventually it's going to be time to pay the piper. And how they're going to do that is through increased enforcement and through the collection of taxes. And so for people who have problems now, just understand the storm that's coming and start saving for a rainy day. Because guess what? It's starting to rain.
And if you don't have a problem, this is probably not the time to be really aggressive in your taxes.
This is not the time to be aggressive, particularly for business owners. Business owners have the highest rate of audit across tax returns, particularly businesses that are under $10 million. The reason for that, and that's audit rate not only at the federal level, but at the state level, for payroll taxes, sales taxes, or state income taxes. And the reason for that is most businesses that are 10 million in revenue and under, and that's revenue is a deceptive number, but most businesses that fall within that category of being a small business, they have enough revenue and they're generating enough revenue to accrue tax liability and make them targets in the event of an audit. They're kind of cash cows, but they don't really have the resources to defend themselves like a lot of the bigger guys. That's why you don't see a lot of large corporations getting audited at the same rate, or having, you don't see Coca-Cola having a massive tax deficiency, because they have the resources internally to protect themselves from anything like that. They're refining, they have people overlooking that process from a tax standpoint daily. They have a tax department in Coca-Cola. Your business doesn't have that. So you need to make sure that you're looking at the situation from a tax standpoint. And the problem is most accountants, again, don't have that level of creativity inside tax season. If you go to your accountant outside of tax season, and tax season is now extended, but if you go to your accountant in August and say, hey, would you take a look at this and make sure I'm doing everything correctly? Your accountant is going to have some level of oversight. The better person for this is a tax attorney, because not only do we understand the law, but we understand how an auditor or a collections person is going to look at the situation. So particularly going to a tax attorney, just paying for a consult and saying, hey, can you help me audit proof my return, or what's the risk here? It's worth the investment. It's like buying a
It's
change
not
of
a huge,
underwear in case you get into an accident.
right, and it's not a huge investment. It's what, to do all that, $500, $1,000?
500 max. I mean, for a consultation. I mean, that's the way that we charge. Some tax attorneys will give you a free consultation, but I mean, the reality is just have somebody give it a second look. It's
Yeah.
It's like going to the doctor. You go in for a yearly checkup. Go take a look at this stuff, particularly now. It's so important now, because with the storm that's coming, an audit is really just a check to make sure everything you're doing correctly. So if you are doing everything correctly, then you don't have anything to worry about in an audit. You just turn in your stuff and you say, go fly a kite.
Yeah.
And that's great. But having that level of certainty, know that you're doing everything correctly, keeping your nose clean at the beginning, that's going to save you so many problems. And, the problem is most people don't like to think about taxes because they involve math. But the reality is it's really easy to protect yourself. And I see such huge liabilities from really simple mistakes. And, the problem with business owners is you just have so much in your lexicon that you're dealing with on a daily basis between producing goods or services or dealing with staff, and you shouldn't worry about the tax things. You're not an expert on taxes. There's no reason why you should be making these decisions. So find an expert, find somebody you trust, find somebody you have a relationship with, and protect yourself on the tax side. And by the way, most of the clients who come see us for compliance work, we usually find some way to save them money in taxes. So usually that $500 consultation investment usually pays for itself.
Comes back.
My personal record is, in a 90-minute consultation, I identified $1.5 million in savings for one of my business clients.
That's awesome.
And he didn't have to pay me for a follow-up. I said, go do this and you're welcome.
Here you go, $500. Go save yourself.
$1.5 million.
I got audited a few years ago by the Texas Workforce Commission because I had 1099 contractors and I changed them to employees.
Yep.
Did it for very specific reasons. I did not realize at the time that because of when I did it, it was going to trigger an audit. So I had an audit, and it was stressful. It was awful. I hated it. I didn't want to talk to the woman.
Wait, I just want to highlight this real quick. You took an action thinking it was the correct action and having no idea what the tax consequences are.
Well, I knew what the tax consequences were. I just didn't know about the audit consequences.
You didn't know about the audit consequences. Right.
And so I went through, and so I had to sit down. Finally, I'd send her information. She'd ask questions. I'd send her more information. We kept missing each other on the phone. Finally got her on the phone, and she's like, all right, let's just talk about this. Why'd you do it? And I told her exactly why I did it, told her why they were contractors before and why they were employees after. She's like, yep, you did exactly the right thing. And I'm thinking, yeah, I know, I'm a CFO, that's my job, I'm supposed to. But still, with everything that I knew and everything that I know, and the fact that I had done everything properly, and I had paid taxes properly in those situations, there is nothing fun about an audit.
Nope.
It is stressful. It takes time. I got a bill from my CPA.
And Brooke, you got lucky. You
No,
may
I
be
did not get
doing it
lucky because I did it. I had been doing it. I was clean.
well, but even if you're the problem is even if you're clean, and this is a big problem I face a lot of our clients because our clients say, I've been doing everything correctly. The problem is even if you're doing everything correctly, it doesn't mean they can't make an assessment against you that's wrong. It doesn't mean they can't penalize you. Auditors make mistakes all the time. And the problem that I alluded to earlier is with the huge crush of cases that are coming, there's going to be more mistakes. People are going to get hit with penalties they shouldn't be. People are going to get hit with assessments that they shouldn't be. Independent contractors are going to get turned into employees when they shouldn't be. And you can do everything to the letter of the law. It doesn't mean that there's not an error that could happen. And, I hit this all the time with sales taxes because everybody says, well, I collected all my sales taxes. I don't have a problem. In reality, you do have a problem because what happens in a sales tax audit, for example, is there's a different ways that they can assess you liability. And with sales taxes or with payroll taxes, you're dealing with larger numbers and they're more complicated than an income tax audit. So with sales taxes in particular, you can take a restaurant, for example. Your average restaurant does 100 transactions in a day. Nobody is going to go through 100 transactions in a day over a 3-year period. So they use shortcuts. And when they use shortcuts and they use guessing, they guess wrong. So we had a situation at the firm. We had a client who owned 2 restaurants. And the conclusion that the civil auditor made, even though this guy had perfect records, perfect. I mean, everything matched. You would have been proud as his CFO, you would have blessed these records. The state of California came back and said, you owe $3 million in unreported sales taxes. And I said, where are you getting $3 million from? Number one, there's the $3 million would have had to be in cash. So what you're telling me is this guy goes home and is just stacking blocks of money under his mattress or burying it out in the backyard. I said, if you really thought that this guy was going to pay $3 million, this guy was underreporting $3 million, you'd be sending the criminal division after him. But that's the point, is most people operate under the assumption that because they're doing everything correctly, that they're safe. And that's not the way to look at it. Anytime that you're being audited, anytime you're dealing with a government agent, there is risk. That risk may not be $3 million of risk, but it's something. And you have to be very, very careful with that. And that's the biggest message that I try and tell people on the compliance side is you can protect yourself as much as possible. A guy like me can come in, I can make sure you're totally clean. But if you get into an audit, I better be the first person that you call because I know the way that the system works. And it's not fair. It's not designed to be fair, and they don't pretend it's fair. And so you have to be really careful because businesses in particular are big targets for state governments.
All right. Awesome. All right, Sam. So I think we're kind of at the end of our time.
All righty.
I really want to thank you for doing this. I do want to let everybody know, did we talk about this in the beginning? So we're kind of doing 2 events a week. We're going to try to do a Facebook Live, which once again, Facebook Live failed, even though I got it to work this morning, whatever. And so we're doing one on marketing on Tuesday, and then Friday we're going to have a webinar that is all about the questions people have about the PPP. And a little bit, we're going to go into what you and I talked about today, Sam, which is really what's the plan for that money once it comes in, and how do we have a plan for it? How do we spend it? How do we keep it separate?
That's awesome.
So
for people.
Yeah, we gotta get this done because this is a major opportunity. So thank you so much for coming, and I really appreciate it.
Perfect. Thanks for the invite, Brooke. Anytime.
All right. Bye, Sam.
Bye, Brooke.